You know what separates the successful traders from the rest? It's not about fancy indicators, complex strategies, or even access to cutting-edge information. It's the often overlooked yet crucial element: trading discipline. I remember a time when I lacked this very discipline. I was like a ship without an anchor, tossed around by the waves of greed and fear. My trading lacked consistency, and I found myself at the mercy of impulsive decisions. But that all changed when I decided to focus on building a strong foundation of trading discipline. Think of it like this: if you're building a house, the success of your entire project rests upon the strength of its foundation. And in the world of trading, your foundation is your trading discipline. Let's talk about it. What is trading discipline, and why does it matter? Trading discipline is essentially the ability to follow your trading plan without deviation, regardless of your emotional state or market conditions. It's staying committed to your strategy even when it feels like the market is working against you. Why should you care? Well, because trading isn't just about technical analysis and market knowledge. It's as much a mental game as it is a financial one. In fact, 90% of trading is psychology. Successful trading is often more about who you are than what you know. It's about building a strong mental game, one that can withstand the immense pressure of high-stakes decision-making. A disciplined trader is less likely to fall victim to the pitfalls of greed and fear, two of the most notorious enemies of successful trading. Greed can lead to overtrading, chasing unrealistic returns, and holding on to losing positions for too long in the hopes of turning a profit. On the other hand, fear can cause you to make hasty miss out on potential winning trades and stick to a losing strategy out of loyalty rather than making an objective assessment of the situation. Both extremes are detrimental to your financial health and long-term success in trading. Trading discipline also plays a critical role in helping you stay focused on your goals. Without it, you're easily distracted by external factors such as market noise, the opinions of others, and short-term price movements. Instead, a disciplined trader maintains objectivity by relying on their trading plan and risk management rules. They do let external influences dictate their actions, and they stick to their guns, even when the market doesn't cooperate immediately. This unwavering focus on the long-term goal helps them maintain consistency over extended periods, which is key to long-term profitability in the financial markets. To achieve this level of mental fortitude and trading prowess, you need to start with yourself. You must confront and understand your emotional biases, build mental resilience, and develop a self-aware trading personality. Let's first discuss emotional biases. We all have them, and they can significantly impact our trading decisions if left unchecked. One common bias is confirmation bias, which is our tendency to seek out and interpret information in a way that confirms our existing beliefs. For example, imagine you've entered a trade and it starts going against you. If you're prone to confirmation bias, you might start looking for reasons why the trade will go against you even further, instead of objectively assessing whether you should exit the position. Another bias is the fear of missing out, otherwise known as FOMO. This can cause you to make impulsive trading decisions, driven by the fear of losing out on potential profits. You might find yourself entering trades too quickly without proper analysis, just because you feel like you're missing out on potential gains. Additionally, there's something called the herd mentality, where you follow the crowd in making trading decisions. This can lead you into crowded trades and potentially false breakouts, without considering the underlying fundamentals. Once you've identified your emotional biases, it's important to take steps to mitigate their impact on your trading. One effective way to do this is by building mental resilience. You can do this through various methods such as mindfulness, meditation, and journaling. Mindfulness involves cultivating a state of active, open attention on the present. By practicing mindfulness, you can train your mind to observe your thoughts and emotions without judgment or reaction. This can help you become more aware of your biases and better equipped to make rational trading decisions. Meditation is another powerful tool for building mental resilience. It helps you develop a calm and focused mind, which is essential for staying level-headed in the face of market volatility. Through regular meditation, you can enhance your ability to manage stress, regulate your emotions, and make clear-headed trading choices. Journaling is also an invaluable practice for improving your mental game. By keeping a trading journal, you can document your trades, analyze your performance, and reflect on your decision-making process. This practice allows you to identify patterns in your trading behavior, including your emotional biases. You can then work on correcting these patterns and developing a more disciplined and resilient trading approach. Next, we come to the importance of developing a self-aware trading personality. To excel in trading, you need to understand your unique strengths, weaknesses, and tendencies. Take some time to reflect on your personality traits and consider how they influence your trading. Are you more analytical or intuitive? Do you tend to be more cautious or aggressive in your decision-making? Once you have a good understanding of your personality and its impact on your trading, you can develop strategies to overcome your weaknesses and leverage your strengths. Remember, you're not aiming to become someone else. Rather, you want to become the best version of yourself as a trader. Do you won't be afraid to experiment with different trading styles and strategies to find what works best for you. Now let's talk about the power of self-awareness in trading. Developing a self-aware trading personality is about understanding your own tendencies and leveraging them to your advantage. Here's how you can do it. First, identify your strengths and weaknesses. Are you good at analyzing charts? Do you have a knack for reading market sentiment? Recognizing what you excel at can help you develop strategies that play to your strengths. At the same time, acknowledging your weaknesses is crucial for knowing where you might need to improve or seek support. Next, define your risk tolerance. How much are you comfortable risking on a single trade? Understanding your risk tolerance can help you set proper stop losses and manage your overall portfolio risk. Do you want to be afraid to start small and gradually increase your risk exposure? As you gain experience and confidence, finally, determine your trading style. Are you a day trader or a long-term investor? Do you prefer active trading or a more passive approach? Identifying your trading style can help you choose the right assets and strategies that align with your personality and goals. Once you have a clear understanding of your strengths, weaknesses, risk tolerance, and trading style, you can start developing strategies that play to your strengths and mitigate your weaknesses. For example, if you're a more emotional trader, you might benefit from implementing a systematic approach. 2. You're trading that relies less on gut feelings and more on data-driven decisions. If you're more prone to analysis paralysis, you might want to develop strategies that allow for quicker execution. And finally, let's talk about the importance of the ritual of routine. Establishing a daily routine is a cornerstone of building trading discipline. It provides structure, consistency, and a sense of normalcy to your trading life. Having a routine helps you get into the right mindset for trading by setting aside specific times during the day for trading. You can mentally prepare for the tasks ahead and ensure that you allocate sufficient time and focus to your trading activity. One way to develop a trading routine is to start with small, achievable goals. Set aside 30 minutes each day to review market news, economic calendars, and technical analysis. As you become more comfortable, gradually increase the time you spend on trading and refine your routine to fit your lifestyle and trading needs. Your routine should include specific steps such as reviewing your trading journal, updating your watch lists, and preparing for upcoming trades. These small actions can add up to significant progress over time. Additionally, establishing a dedicated workspace can contribute to the ritual of routine. Having a designated area for your trading activities can help you maintain focus and minimize distractions. Keep your workspace organized and equipped with the tools you need for efficient trading. Make it a place where you can immerse yourself in your work and make informed decisions. In conclusion, trading discipline is the bedrock of successful trading. It's the invisible force that drives consistent profitability and long-term success in the financial markets. Nurturing a disciplined trading approach starts with recognize and understand your emotional biases. Build mental resilience through practices like mindfulness, meditation, and journaling. And develop a self-aware trading personality that aligns with your strengths and risk tolerance. Cultivate a positive trading mindset by focusing on your goals, staying committed to your trading plan, and maintaining objectivity in the face of market volatility. Remember, trading discipline isn't about suppressing emotions. It's about managing them effectively and using them to your advantage. As you continue to hone your trading skills, keep in mind that every successful trader was once in your shoes, learning and refining their approach. Embrace the journey, celebrate small victories, and learn from setbacks. With dedication, patience, and an unwavering commitment to self-improvement, you can develop the trading discipline needed to thrive in the dynamic world of trading.